Hi, in today's video I will cover the price to book value ratio. This is a very fundamental ratios, and for the value investor definitely they will look into this ratio. Myself Pramod Kumar, I am a CFA charter holder and FRM certified. So just let's go straight into the ratio. So this is the price to book ratio. Basically this ratio, what is trying to tell? This ratio is trying to tell is how the given security or stock, how much its discount as per its book values. So that's what this is about. Okay, so if it's less than 1, this means the security is as at a discount, right? So let's take an example. So for example, how to calculate the book value. So we in the company, when you go to the balance sheet, and it has assets and it has a liabilities, right? If you reduce the asset minus liability, basically that's the worth of the company. So we'll say, okay, this is the book value of the company. So for example, let's take the asset, and we have asset as the 100 million, right? And if we reduce the debt right here, from the liability perspective side, then it's a $20 million dollars in debt. So and we assuming the share outstanding is 10 million and the market price for that security is $4. So if for the book value is simply the asset minus the debt piece of the liabilities, right? And it's coming as 80 million. 100 minus 20 is 80 million. And to compute the book value per share as what we need in this formula, so basically this book value we divide by the number of share outstanding, right? So this comes as $8 per share. So now if when we have the market price, which is also on the per share basis, and the book value also on the per share basis, to quickly see, okay, what is the price to book ratio. So the market price divided by the book value per share, it's come as 0.5. So this means this security is 50% discount given its the book value, right? So and in my channel I do cover, it's not like this security doesn't exist. Let me show you some examples of that. So let's take few examples. The very first one is the REIT stock, right? So this is the RioCan REIT, and if you go to the Yahoo Finance and click on the stats, and the stats basically under the price and book ratio, you will get this ratio pre-calculated for you. So here you can see this as compared to is market price, the books, so it's only 69 cents. So this means is less than 1. So this security is undervalued. For sure, we need to look into the other factor as well. Okay, how is the PE is going on, or what other ratio and matrix is going on. So if you don't know how to PEs, I have a similar video on my channel on the PE as well, what is PE and how it's calculated. Feel free to check it out. And even I have a video on the gross profit and balance sheet analysis if you don't know how to do that. Let's take a couple of more examples. So for example, this is the Xerox holding, right? If I go in the Xerox, if you see, even still, when I covered this a month or two ago, it was pretty lower even in this price to book, but now it's even 15% less from his book value. So market price is less, right, as compared to his book value. So this is undervalued. So this doesn't mean that maybe there are certain cases why, or maybe there is some why this security is undervalued, right? Maybe it's because it's getting neglected, or maybe there is certain risk. For example, in the very first case, we know and the market is closing, so that's why, although this is a very big REIT stock in Canada, but due to the market closing, and so that's why it get penalized because of COVID. Similarly, if I take the Carnival Cruise, we know all know this, and this stock is even 0.76, right? 24% down from his the book values, right? And we know why, because they cannot just go out and sail those ships. So this industry is quite down as well. And some are like for example HP as well, right? So maybe there is no less growth or something, but if you can see, this is like even only 6% down from his book value, but still it's down. So this doesn't mean that we won't get it. We find that this kind of security, but for sure you won't find it purely in the technology. Let's take for fun the Google stock. If I go to the Google and click on the stats, and here you see the price to book is 5.47, right? 5 times of its book value, right? Whereas the PE is 33 times of the book value. But for sure this is the giant stock, although the share is dropping today. If you want me to make certain these kind of video, please subscribe to the channel. If you're new, give a thumbs up, and comments if you want me to cover any other the informations or any other financial knowledge which you don't know. So I'll try to cover that in my channel. Thanks for watching, and bye for now.